Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 10th May 2021 in the international market. The much-awaited non-farm payroll data was out, and here it how it looked. Actual 0.26 million versus expectation of 1 million job addition. Unemployment rate edged up at 6.10 from current 6%, whereas the expectation was for 5.8 percentage points. On early Friday, after seeing this data, bond yields were down as the probability of tapering decreased further as the job addition did not look pretty. But the inflation worries brought the yields back up and ended US 10-year on a higher notes. US 10-year closed 2 basis points up at 1.60 percentage points and 30-year closed 4 basis points up at 2.28 percentage points on Friday. Did you know that many of the experienced investors are now shouting it loud on the upcoming inflation? A couple of weeks back, Janet Yellen warned us all. Now last Saturday, it was Mr. Warren Buffett who was seen saying we are seeing very substantial inflation. Please do note that Berkshire Hathaway owns US, one of the largest home builder companies. Interesting thing is, companies are now able to pass on the rising cost to the consumers, and consumers are accepting it. Hence, this time the inflation worry does seem real, and everyone around the globe is worried. In the crude oil market, crude is trading at $68.96 per barrel. Short-term range for crude seems to be $67 to $70 per barrel. Did you know that Saudi Arabia is set to reduce the oil prices for Asian oil countries due to India's lack of crude oil demand? If Saudi does reduces the prices, it would be the first time in 2021. Last time the prices were reduced were in December 2020. Since then, the oil market has been bullish on the global economic recovery. In the currency market, dollar index or DXY is at 90.26. DXY's today's range seems to be 90.10 to 90.65. USD CNY or Chinese yuan is at 643. USD INR with a high of 73.76 closed at 73.51 near day's low. We had informed you that daily lower lows and daily lower highs are being formed, and that was the case on Friday as well, which is a clear indication for strength in USD INR leading to 73.30 and then eventually 73. Remember, when USD INR was trading at 74.50, Knight Research could see USD INR at 73.50, and here we are. What an accurate assessment of data and situation by the Knight Research team. USD INR's range for today seems to be 73.10 to 73.50. We do expect USD INR to touch 73 very soon, but we'll be watchful on very upcoming data. 73.30 will be a key level to watch. In the domestic market, as Knight Research team had warned you that the market participants are rushing to book profits, and it was confirmed on Friday as well. 563 GS 2026 closed at 554 versus 552 the previous trading day. 585 GS 2030 closed at 601 versus 597 the previous trading day. The expected profit booking cycle is going to continue for this week as well, and we expect more and more profit bookings to take place. There are no OMO announced for this week, and the next rupees 35,000 crore GSEP second tranche is on 20th May. Interesting fact is now the traders have learned to live with this new set of GSEP information, whereby they will continue to trade from current 35,000 crore GSEP second tranche announcements to execution. As traders don't believe the 10-year can last long below 6%, they have started booking profits or will take short positions just till 20th May. By 17th May, they will start covering their positions and build fresh longs to make use of GSEP and again book profits. 7th May 2021 GSEC auction cutoffs were 563 2026 at 554, GOI FRB 2033 at 487, 664 2035 at 659, 667 2050 at 682. No green shoe options were exercised. The cutoffs were in line with market and Knight Research expectations. Did you know that Fitch, a rating agency, last week said India's fiscal deficit is likely to rise to 8.3% of the GDP versus budgeted aim of 6.8. I repeat, Fitch says India's fiscal deficit is likely to rise to 8.3% of the GDP versus budgeted 6.8. So we have a multi-year higher borrowings, higher fiscal deficit problems, and RBI really trying hard to control or anchor the yields, and as Mr. Das says, orderly evaluation of the yield curve. Knight Research a prediction for this week: 585 GS 2030 to trade in 598 to 603 range with a bias towards profit booking leading to 603. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Night Fintech. See you tomorrow with a new episode of Night Snippets.